In this video, we are going to walk through a variety of journal entries. A good solid understanding of journal entries will help you immensely in financial accounting. We are going to be journalizing some fictitious entries for Cedar Point Amusement Park located in Sandusky, Ohio. The entries we will be doing include sell admission to the park, purchase merchandise inventory for gift shops, rent lockers to guests, pay employees, and borrow money. All of these entries will be from the standpoint of Cedar Point. Let's get started. The first transaction we have is on May 1st when we sell admission tickets $100,000 in cash. The entry for this will be to debit cash for $100,000. I'm debiting cash because it is an asset and it is being increased. Remember that you can look at the debit and credit rules table from the last video. The other side of this transaction is a $100,000 credit. Debits have to equal credits. This credit will be to sales revenue because that is why Cedar Point is receiving the cash. The final step on this journal entry is to put the memo line, which is to record sales revenue from admissions. Our next transaction happened on May 3rd. Cedar Point purchased merchandise inventory for $5,000 on account. When we see the words on account, that means this has to be accounts receivable or accounts payable. Cedar Point is purchasing merchandise inventory, which means it is dealing with a supplier. Supplier means accounts payable, so we're going to have accounts payable in this journal entry. Accounts payable is a liability. Accounts payable is increasing. So looking at the debit credit rules, we see to increase a liability, we will credit it. Now I know my debit amount has to be $5,000. I can put that in there and now I just need an account title. Well, Cedar Point is purchasing merchandise inventory, so we will debit merchandise inventory. We also know we debit it because merchandise inventory is an asset and it's increasing, and according to the table, we will debit an asset to increase it. The final step is to write the memo line of purchase merchandise inventory. And we're done with this one. Our next transaction happened on May 6th. Cedar Point rented lockers to guests for $500 cash. In this transaction, Cedar Point received cash, so cash will be increasing. Cash is an asset, so we're going to debit cash for $500. We need to credit something for $500. Cedar Point is receiving the $500 for locker rental, which is a form of sales revenue, so we will credit sales revenue. The final step in this journal entry is to write the memo line of record sales revenue from locker rental. Our next transaction was on May 15th when Cedar Point paid employees $75,000 in cash. By the way, I am greatly simplifying this entry to ignore payroll taxes, which we will get to in a later chapter. The easiest place to start in this entry is cash. Cash is an asset. Does cash increase or decrease for Cedar Point? Cash decreased because Cedar Point is paying cash. So we have cash, an asset, decreasing. To decrease an asset, we would credit it. So we can indent cash, skip a line, and then credit $75,000. We know we have to debit $75,000, and the only question is, what account is that? Why is Cedar Point paying $75,000? It is salaries expense. So we will stick salaries expense in there. The last step is to put the memo line of record payroll expenses, and we're done. Our final example journal entry is to record when Cedar Point borrows $20 million in cash. Cash is involved in this transaction. It is an asset and it is increasing. We combine those things to come up with increasing an asset, which means we debit it. The other side of this transaction will be to loans payable, since Cedar Point is borrowing the money. Loans payable is a liability and it is increasing, so it will be credited. Our final step in this transaction is to write the memo line of borrow funds. And that's it for these examples. That concludes our review of how to analyze the impact of business transactions on accounts, Part 2. Thanks for watching.